Hi, good evening, ladies and gentlemen. Can you hear me? Yes, okay, great. So let's begin today's session, which is going to be about stock investing. And I think the market has cleared quite a few important, or I would say controversial milestones. One is the Israel-Iran conflict, and then the bill that went to the big, beautiful bill that went to the Senate was cleared yesterday. Of course, it's not out of the woods. There are always things to worry about, which later we will talk more about it and how to approach all these kind of things, right? And I also assume that for you who attend this session, you are interested in buying individual stocks. Okay, because nowadays there are a lot of investment options. There are ETFs, there are unit trusts, there are a lot of things that you can invest in without having you to DIY, right, to make your own investment decision to buy individual stocks. Okay. I believe that you come here means that you have some interest at least. Okay, because you have no interest, though, you will not be joining this kind of session, right? Because for some people, investing can be a very boring activity, but for others like me, investing is a very interesting activity. You learn about yourself, you learn about the world, you learn about how the markets work as well, right? And at the end of the day, you also make money for yourself, right? Using money to make money. Okay, that is the uh, very, very key skill that I believe that people should have going forward. Okay. I'm Alvin. I'm co-founder of Dr. Well. I invested in markets for over 15 years. I've written books. I've appeared in many media appearances. You may see me in some of the episodes on Money Mind before, right? Or some of the radio interviews, right? You might heard on your way home. So these are the partners that Dr. Well have worked with. Singapore Exchange, of course, and with a lot of banks, brokers, financial institutions in general, right? So they trust us, and we also believe that we don't sell those get rich quick kind of dreams, which you and I know that is too good to be true, right? So that's why these financial institutions also understand that, and they find alignment with what we share, right? So we give you the hard truths, okay? And let's begin with understanding a little bit about the challenges of stock investing. The very first thing is that if you want to buy individual stocks, right, you have to know which stocks to buy. Okay, you cannot just um, randomly pick stocks and then just put in a portfolio. Okay, just to give you a sense of the number of stocks that's out there in the universe. And we're not even talking about all the stock market. I'm just talking about four stock markets that probably you will look at. And most likely you probably look at any of the first three, right? So US market is one of the most popular market. It has over 4,000 stocks. Okay. You can't possibly buy all of them. If you buy all of them, might as well buy ETF, right? Second is Hong Kong. You have about 2,600 stocks as well. Okay, there can be increasingly more and more stocks in Hong Kong due to the IPO activity that's going on. Right, a lot of China companies also want to list in Hong Kong to get international access. And even in our small sunny Singapore, we have 600 stocks. Okay, that's also too many for any individual portfolio. So again, if you want to pick stocks, you have to eliminate majority of them. And for those who look at the Asia market, which are the stocks that are listed in Shanghai and Shenzhen, you're looking at more than 5,000 stocks. Okay, so if you add together, there's more than 10,000 stocks, right? So that's one of the biggest challenges is that there's so many stocks out there. There are so many things happening all the time. There are different businesses reporting different kind of progress. And how do you assess, right? Which stock is at the right time to buy? Which stock is a good stock to buy? And this is one of the biggest challenge that I always hear from investors. That's why they always ask me, right? What stock should I buy now? What stock should I buy now? They totally are clueless. And they always rely on others to help them invest. To me, that is not a very good idea, okay? Because every person will have a different preference, in the way that they want to build their portfolio, right? Some are more similar than the others, but even the most similar investors will have differences. Okay, even Warren Buffett and Charlie Munger couldn't agree on every single stock that they buy, right? Or stocks they don't buy, right? So it has to be very personalized, and you need to know what you want. Okay, so that's why I don't believe in stock recommendation or stock tips. It's just too personalized to do that properly. And with over 10,000 stocks, you can imagine how many combinations there can be. It is infinite. So that's the first challenge, right? Later we'll talk about how then do we approach all these kind of things. Okay, we gradually build this up. And the next thing, this is a bit of tongue-in-cheek moment, and we're looking at underwears. Okay, we are not doing an e-commerce live sales here, but there is because I try to bring the lesson as easy as possible to you, right? Across to you as simple as possible without all the jargons, and therefore using analogy will be useful. Okay, and here, right? I want to orientate you a little bit. Okay, the duration, right, or how long do you want to wear an underwear does changes your consideration of what kind of underwear do you buy. Okay, whether is it men, I show you here men, because I'm a man, but it could be women as well. Okay, so, for example, if you are intending to just go for a short trip or maybe a camping trip and you have like no time to shower, no place to do your laundry, and you just want to buy a pair of disposable underwear and you just wear it and then you just throw it away. Okay, for example, right? In that sense, right, in that case, your consideration is that I'm not going to use long, I'm going to throw it away. I shouldn't be spending so much money on it, correct? Then you just buy as cheap as possible, maybe a 5 pack or 10 pack, as much as cheap as possible, and of course of minimal quality but you won't demand like super high quality, right? So you buy like a $2.99 underwear, you wear it, and then you just throw it away. Okay, you don't even bother about it anymore. And let's say another scenario, right? You want to buy a new set of underwear, and maybe I don't know, Chinese New Year, must wear new stuff, and you intend to like probably wear it like a year or two, right? Then you would change, okay, again. And therefore, it cannot be something that's like a disposable, right? It cannot be that cheap that it doesn't feel comfortable to wear, that you're going to wear for 1 2 years. It's not very long, but it's I would say that it's considerable amount of time. And maybe you will go down to Uniqlo, right? A very convenient place to get your especially for guys, right? It's the Singapore uniform. And you can get it for like 990, right? Not expensive, okay? And it's reasonable quality, and you can wear it for a few years, right? Without problem. And maybe in another scenario is like you want to invest in a few pairs of underwear that you can wear for a long time, right? So that you don't need to keep changing and changing after 1 or few years. Okay, some people are just lazy to even go shopping. And then you might go for the what they call the merino wool kind of underwear, right? Icebreaker is one brand, and then you go and buy one pair. It costs about $60, right? It's like you can buy like 6 pair of underwear from Uniqlo. Okay, but this one pair maybe can last you more than 5 years. Okay, so what I'm trying to say here is that you realize the duration that you're going to use a product will change the way, or you change the factors you consider when you purchase that product. And this is something that I realized when you go to the stock market, right? People lose that common sense. Okay. I don't know whether you see the pattern here, right? So if you want to hold anything long term, right? If you want to use anything long term, do you demand higher quality or lower quality? Higher or lower? If you want to use something for a long time, do you demand for a higher quality product or lower quality product? Long term, higher quality, right? Common sense, right? Okay, then it can last longer, right? You cannot possibly use the disposable underwear for 5 years. It's very unhygienic, by the way. Right? So you definitely demand for higher quality, correct? Common sense, Okay. But later I will show you what people do when it goes to stock market. Okay, you demand for higher quality, right? And you look at the price. If you buy higher quality, what happens to the price? The price becomes more expensive or cheaper? Becomes more expensive, correct? So that means that you need to pay up for quality, lah, essentially. Okay, so the time frame changes the kind of stocks you buy. Okay, so that's a pro tip for you. I think not many people pay enough attention to this principle or this factor that they actually use to evaluate products every day, but they just don't use this principle to evaluate stocks in the stock market. They forget that this duration has a very big impact on the kind of stocks you buy. Okay, this is usually not even an answer, right? So how do people usually invest? Okay, let me explain a little bit to you. So they'll anyhow buy a stock. Okay, let me see whether I have a blank space to draw. Right, okay, let's use this. Okay, so this is what usually people do. So they will just buy a stock without homework, without much thinking lah. Right, they just buy a stock. Okay, if the stock make money, let's say go up 10%, what would they do? What would they do? What would they do? What do they do? Sell, right? Right now, take profit lah, make money already. Okay. If the stock go down 10%, what would they do? What would they usually do? All right. Okay, most people lah. What I mean is most people. All right. Okay. And if continue to go down 20%, 30%, they will still hold, right? The lower you go, the more they will hold. Okay. Then they tell themselves they are long-term investor because they believe that long-term the stock goes up. All right. Okay. So you realize it's not the duration that they first consider, is that after they anyhow buy a stock, then they use time, hopefully they use time to solve their investment mistake. Does it make sense or not? Does it make sense, right? Remember, I used the analogy just now, right? So stay with me, okay? The analogy is a bit long, right? But it's a very important lesson. I want to share with you all these real lessons because this is what I see every day. Right? Because I interact with many investors. This is what I see every day. It doesn't change one. Some people can change, some people cannot change. Okay. It's just how our brain are wired. Okay. There's nothing right or wrong about it. But if you want to make money, you have to understand this point. Okay, it's a very important point. But rather, you need to flip it around, right? You have to decide, is this stock that I'm going to buy, is it for short term? Is it for medium term? Is it for long term? Right? That is the first consideration. If it is really for long term, I must buy a quality stock. Okay, not a random stock. Because the random stock you buy may not be a quality stock. That's why over a long period of time, the stock don't go up, right? The stock goes down. Okay, the stock underperformed because it wasn't a high quality stock in the first place. Okay, so just remember my underwear analogy, right? If you can find it useful. Okay, remember, it's not that you buy a stock and you use long-term investing as an excuse to cover up your investment mistake. Okay, to cover up low quality stock. You have to flip it the other way around. If you want to hold any stocks long term, you better look for only high quality stock, because low quality stock is like a disposable underwear. You picture lobang, okay, you have a hole very fast. And even if you hold the underwear and use it for a long time, will the whole man by itself? It will not. Just like a low quality stock, it will not improve over time. The losses will not recover, right? And now I think it's a good example to show you a real case. Okay? Anyone know what stock this is? This is a 30-year history stock. This chart has 30 years. For those who can really see the stock name. I don't know whether you all can see, it's very small. Otherwise, you can just make a wild guess. Okay. General Varman says Nokia. Oh, very sharp eye, or your monitor very sharp. Okay. So yes, this is Nokia. Right. I don't know whether you all remember. Right. Nokia used to be a dominant phone maker many, many years before Apple. In fact, before Apple, there was BlackBerry, and before BlackBerry, there was Nokia. Okay, it really dominated the market, and it was a blue chip stock for a long time. And you can see the share price really rally a lot. Okay, and eventually, right, things don't turn well. Okay, so the other part of the equation is that just now we mentioned, okay, not all stocks can be hold forever. Right? Some stocks are meant to trade short term, some stocks are meant to trade, some stocks are meant to buy and sell after a few years. Some stocks you can hold for a long time. Okay, Nokia could be a stock that you can hold for a long time, right? At that time, maybe and many analysts will say that it's a very good stock, right? It's possible, okay? But sometimes things change, and you might need to change your position, and which means you need to sell at some point in time. If you see BlackBerry coming in, taking away the market share, and then after that, Apple coming to take the market share, do you still die hold the stock because you are not making a profit? Even though you know that it's the right thing is to just sell and cut loss and move on. Easy to say, that's what the logic says. But most of us, because of our biases, loss aversion bias, right? That's what the psychologists call it. You hang on to that stock, even though you know the right thing is to sell. But because it could be, it's too painful to sell because who wants to sell a loss, right? And then just hope for the best. And then just resign the fate. I'm a long-term investor. Okay, so this thing called long-term investor, right, is a word that is being abused. It is not really that people are thinking long-term. They did when they buy a stock, they didn't really think about, okay, this stock can prosper for the next 10 years. They never think like this. Right? They just buy a stock, hope that they can make money in quick time. But when it doesn't happen, then they start to hold long-term. Okay. So these are some of the major challenges that I think investors need to know, right? Actually, these three questions come together, right? Which stock to buy, how long to hold, when to sell, they are actually all together. You have to consider them all together. That is essentially your investment strategy, right? It has to tackle all these three parts. Okay. Just remember that not all stocks are the same. Some stocks are meant for short-term trading, speculative. You cannot hold them long term. Some stocks are medium term. Okay, now just underwear example, I hope you remember. Okay, some stocks are medium term. Right, the quality is okay, so, right? But the stock is very cheap. So you can buy and sell at a high price later. Buy low and sell high. Right. So this is your buy low, sell high. This is your buy and hold stock. Okay. And then this is your buy high, sell higher. Means trade for a quick buck. Right? So all these are very different approaches. So the duration, how long you hold a stock, it really depends on the kind of it will shape the kind of stock you buy. You will also use the kind of strategy that you do. It is not that we are not here to talk about, there's always this debate, oh, investing is better than trading, or trading is faster than investing. Okay, we are not here to debate that. Every time frame there is a strategy that works. Okay, actually there's more than one strategy that works. Okay, it is not a comparison. It actually depends on your preference and depends on your objective. So you have to decide, right? Am I what's my preference? Am I the kind of a trader who want to just hold a position for the next few months? Am I a mid-term investor that are going to buy a stock and then going to sell in the next few years, right? For maybe a double, triple. Or am I one that I don't want to trade in and out? I find it very tiring. I just want to buy something good and sit on it forever. Okay, so these are the first part that you need to. That's why I say it's very personalized. You need to ask yourself what kind of investor, what kind of trader you are. Then you can find the kind of strategy that you can adopt. Okay, for that time frame that you're looking at. And this is something that I think not enough people emphasize about it, right? It's not that the method doesn't work. It's probably the method that you use doesn't meet the duration that you're looking at, okay, or the time frame that you're looking at. That's why it doesn't work. All right. Okay, Angela, that's a very good question. May I know at what percentage drop in price you will cut loss? Okay, so the answer is not so simple, not so direct, because it depends on the strategy that you use. So if you talk about percentage drop in price, then you cut loss, right? It's usually referring to a short-term trading strategy. Okay, they could be looking at -5%, -10%, then you cut loss, right? But if it's a medium-term and long-term strategy, usually it's not by percentage cut loss. Okay, long term is usually because the fundamental has deteriorate or damaged. The stock is damaged permanently. Then you sell. It's not price based. And for the medium term one, is usually the thesis has changed. Okay. The reason why you buy the stock undervalued and then you think that it's going to rebound, and the rebound is not going to happen already. Something has changed. Then that's where you sell. Okay, again, it's not dependent on the percentage of drop in the share price. Right. So it's a long answer again. Okay, actually the answer is even deeper than that. But I just want to give you a flavor that it really depends on the context, okay, and the strategy you use. Right. We will build on this as we go along. Okay, I know it's usually a bit hard for you to understand right from the start. Okay, but I just want to give you a bit of that uh differentiation of what you usually hear, right, from others. Okay, I think nobody really talk about this, right? Matching the duration with the strategy. Okay, so it's very important, very, very important concept, right? Because how I know, I learned the hard way. Okay, that's why I want to tell you, so you don't need to learn the hard way. Don't need to waste your money, right? Don't need to waste your capital. Okay, so the other thing that I want to mention that most people also focus on the wrong things, right? These are potentially some of the things that's happening right now, right? So the conflicts and wars is actually still ongoing. It's just that it's not in the foreground anymore, right? There's peace talks going on. Trump tariff is coming back. They're talking about what, 9 July, right? Is it 9 July or 7 July? I can't remember. Okay, that whether the extension will come or whether Trump will go crazy again and enact a what 50% tariff on some countries. And the Federal Reserve is also still not cutting rates, okay, because they are afraid of the tariffs actually. Right? They acknowledge that. Otherwise, they will cut rates already. So there are always things to worry about. And the media will always report all this negative news more than the positive news. Okay, the reason is because negative news sells better. Negative news get more eyeballs. When you get more eyeballs, you can sell more ads, you make more revenue. And that's why the media will tend to report more negative news than positive news. And this is also something that you must understand. Right? We live in the information age. The problem with the information age, there's too much information, such that the noise is much more than a signal. Okay. So another thing that you need to do as an investor is that you need to ignore the noise as much as you can. Right? It's impossible to ignore all noise. Okay, then you won't have a life. Is that you just have to focus more on the signal. Okay, and what is a signal? Signal usually come from your investment strategy. What is your investment strategy saying? Okay, then just now I talked about whether are you a short term, a medium term, or a long term investor. All this will influence the kind of strategy you use. And once you decided on a strategy, you focus on the signal. Don't go and read the media and use the media to invest. This is the worst thing you can do to yourself. I guarantee you, you follow every headline that you see in the media, right? Over time, you will lose money, right? Okay? And that's what most people do, right? And you know most people lose money. So you better don't listen to most people and follow what most people do. Okay? So this is what usually people do. Okay? They listen to media, they anyhow invest. After they anyhow invest, they make a mistake. They just keep holding, hoping that their loss become positive in the future. Correct or not? I can tell you that because that's what I see every day. Okay, sad but true. Right? So you need to reverse everything, decide what kind of investor you are, choose the right strategy. Once you settle on the strategy, keep following the signal, ignore the media. Don't use the media to invest. Let your strategy tell you what stock to buy, what stock to sell, what stock to hold. Okay. So the stock market will climb over already, right? There are so many disasters happen in the past, so many bad events happen in the past. Right? What happened? Over time, the stock market continue to go up and up and up. Okay. Yes, there are crashes, which sounds very scary, but each time they pass the previous high. Right? So overall, the thing is that you need to focus on your strategy, not focus on what the media tell you. So you need a strategy, right? Whether is it a value strategy, this is more for focus on value first. I'm going to talk about dividend. Okay, this is more for medium term. Growth strategy is more for long term. Momentum strategy is more for short term. Okay, so that's how we link the strategy to the duration that we talked about just now. Each require you to look at different aspect of the stock. Okay, so now let me give you a bit of demonstration, right? What do we mean by value strategy? What do we mean by we want to buy a stock cheap and then wait for a few years and sell it, okay, for a good profit? Let me just quickly show you. Give me a while. Let me get the files ready. Meanwhile, you have question, you can type in the comment box. Okay, let's just use one example. Later I'll explain a bit more. Okay. I'm compressing a lot of things. Of course, there's a lot of details in between, but for the interest of time and to give you the most value in the shortest possible time, let's just go faster, okay? Right, let's look at this stock called Centurion. I don't know whether you are familiar. Some of you probably not familiar. It's a local Singapore company. Okay, it can work for any kind of stock. All right, not say any kind of stock. Sorry, any kind of market. Right, any kind of market. But I'm just using this Singapore stock to demonstrate, and later I'll tell you why certain geography is good for certain stocks. Okay, so this is you have to understand the kind of the stock it is. Okay, so this is doing workers dormitory, student accommodation, right? It's not really a growth stock. Okay, it's more in the traditional industry, right? It's not like your tech sector where people talk about AI, where people talk about growing the business, having more revenue. These are the kind of mature industry, and they mainly serve like the Singapore market. And how big can it be, right? Yes, we have a lot of foreign workers. Yes, there's a shortage right now, but it's not like the foreign workers number will just keep growing without any control. Okay, we have a limit. Eventually, 6.9 million population, right? And I don't know how many percentage will be foreign workers that's in the construction sector, for example. So it is not really a growth stock. It is more like a value stock, right? So these are the kind of stocks that it's like the Uniqlo underwear, right? You buy cheap, you use it, okay? After a few years, you throw it away after you have made use of it. Okay, this kind of stock is like this, right? You buy them cheap, and once the price appreciate, you get rid of them, you sell them. Okay, it's not something that you're going to hold forever. Okay, so that is the kind of you need to understand the character of the stock or the personality of the stock. Then you know what is the gameplay. This is a medium-term gameplay. This is not a long-term gameplay. This potentially can be a short-term gameplay right now, right? Because it has momentum. Otherwise, most of the time, it's not really very short-term. Okay, it's more suitable for medium-term gameplay. At least that's what I look at it a few years ago. Okay. So let's do some calculation here, right? So I will use the balance sheet, which has a list of their assets and their liabilities. Okay, why is this statement important? Again, depends on the strategy, right? So for this kind and the stock, And this stock is mainly about its assets, its dormitories, right? Its dormitory is main source of business, is the property, which it will be part of its business assets. As we can see over here, like for the investment property is the largest number, $1.8 billion worth of investment property. So these are the dormitories that's rent out. That's the main core business. So that is the main value of what you want to get out from this business, right? And it has about 89 million cash, okay, because I also cash is also a good asset, okay, and there can be also additional land and building, but it's not a lot, so let's exclude that. Let's just assume it's zero. Okay, so I only take cash and property, for example, right? A lot of other assets I just discount them just to be a lot more conservative and see whether I can get it undervalued. So total assets is 2.2 billion and total liabilities is around here, okay, close to a billion. And there could be, yeah, this doesn't belong to shareholders, so you need to minus. Okay, so yes, you also need to understand a bit of the accounting. Then you will be able to evaluate and do this kind of calculation, but it's not rocket science. Okay, because once you understand the concept, you will be able to do it. Okay, and this, for example, I don't have a finance degree. Okay, I'm an engineering guy. Okay, so if I can do it, you can do it. Okay. This formula was missing. Okay, let's look at the share price right now. I'm done with my valuation, 1.69. Okay, so my valuation is $1.05 for this stock. Okay, how do I know? That's because I've done the calculation. And remember, the one of the question is which stock to buy, right? And also when to buy. Okay, so is this stock worth buying right now? My answer is no. And why do I know that? Because I did my calculation is $1.05 and the share price is $1.69. Okay, so this is what we call valuation. This is what we call due diligence. Okay, it's not like here people say, oh, this stock is cheap, this stock is good, it's going to run. Okay, when you hear this kind of comment, take with a pinch of salt. You need to do your groundwork. You need to check. Then you have the assurance that whether you're looking at the right thing or not. Okay, you cannot just invest based on rumors. You can just invest based on someone's comments. Yeah. Right. Whether you make money or lose money, the person is not going to benefit or get hurt. Okay, you are the one. Right. So you better do your homework and make sure that you are on the right track. Okay. So this is not a stock that I'll buy right now, but this is a stock that I bought a long time ago. Right. The stock actually has went up a lot in the past 1 year, almost double, more than double, 186%. I sold it earlier. Okay, I sold it earlier. Later I will show you. All right. But for me, I also got a good return already. Let me just maybe go back to the slides. Okay. So give you a bit of context, right? So actually last year I already sold it. 19 September, I sold it at around 80 cents. And I already got 164% gain. Okay, I held the stock for a few years. Okay, I held the stock for a few years. You can see the stock was trading around 40 cents for a long time. Okay, and I guarantee you nobody will pay attention to this kind of stock. That's why it's undervalued. Okay, so this is what we call a value stock. You want to buy them when it's undervalued or cheap. For example, I did the valuation was about $1 and the share price was 40 cents. So it's significantly undervalued. That's where I know I can buy with a large margin of safety or discount. And I just wait for things to happen. So after COVID, the construction recovered and construction accelerated in the last few years actually. And the results started to show, right? Revenue 27%. This was 2024 first half. Second half was even better, right? And net profit up 50%. And the stock rising. And recently they talk about they're going to spin off a REIT, a workers' dorm REIT, and therefore the share price rallied even more. Okay, no regrets, right? I already got 164%. That is the game play. Okay, that was the plan to buy around this 30 plus cents and then sell when it's close to its all-time high. Okay, which was around 80 cents. Right, then I just get out. Okay, so that is how Uniqlo underwear stock look like? Okay, when you buy, use it for a few years, you sell it, okay, for profit, right? Unfortunately, I cannot show you the calculation again because I don't have enough time. Yeah, but I just wanted to quickly give you the gist of it. Does the value include the impending REIT listing? Yes, it does, because the properties are the ones that they will pump into the new REIT. Okay, can. But it's not something that I will buy right now, right? Because I already exited already. Okay, the value is extracted. And this was actually a stock that we talked about or practice during our course for a few years, right, prior to this. And now, because we cannot use this example anymore, okay, we have a new example. Okay, that was Hong Kong Land. So since around September last year, so it was still about $4-5, right? Now it's about $6 already, up almost 100%. Okay. And actually, the stock is still undervalued. Okay, if you do the same calculation, it's still undervalued. Okay, right? I think the value is double digit one. Okay, maybe about $12, $10. I don't know. Can't remember exactly how much. Okay, yeah, but that's how you know that whether stock is deserving for you to buy. Okay, so any stock that you want to buy and sell a few years, right? Time frame, you need to buy them cheap and then you sell them. They don't need to be very high quality stock. They don't need to be like your Microsoft, your Google, your Netflix, all those kind of very exciting, sexy stock, Nvidia. Those are growth stocks. Those are not really value stocks. Okay, so the approach that you do will be different. Okay, it's not the same. Right? Why high-tech company are priced with so much discount against the value way you did? Oh, I don't understand your question. I mean, I was like, why high-tech company are priced with so much discount against the value way you did? They were not actually high debt. I would say reasonable. In fact, there are a lot of other cash-rich company. There are some even companies with no debt. They can also have such discount. Okay, a lot of all these value stocks, right, typically do not get favor from a lot of investors, right? They are always seen as like, oh, you're passe, you're not the exciting growth stock anymore. And because you have no growth, so I should not value you so highly, and that's why I price you lower, right? So there can be a lot of all these reasons. At the end of the day, a lot of all these stock prices are based on perception, right? And that's why you find the stock names, all these are not the most exciting, not the most sexy one. And that's why you can get them at a much cheaper price. Okay, but you need to do valuation. Otherwise, you will not know what's a good price to buy. Okay, this kind of stock, you just rebound with a substantial profit. You can see you can double or even 200% possible one. Okay, all right. Not necessary, it must be your Microsoft, your Alphabet, then you can make 100, 200%. It's not true. There are a lot of all these value stocks that can do 100, 200% in a few years. Not a problem. Okay. And a lot of people also start to miss this. Okay, I don't know whether you know this, right? Singapore stock for the past 1 year has been doing very well. A lot of people have been laughing at Singapore stock, Singapore stock. Okay, say, yeah, Singapore stock dead already lah, right? Actually, it was dead for a long time lah. But last year it came alive. Okay, for last year Singapore stock is up 33% in USD terms. If you convert back to Sing dollar, it's even higher. Okay, because USD weakened against Sing, right? So this is in US dollar terms, right? So all these are in US dollar terms, so that is fair. Same currency. Hong Kong is up about 30%. Okay, also a place with a lot of value stocks. And China is also up about 30%, right? This includes the A shares. And US is up about 12.5% since a year ago, right? So Singapore stocks actually more than double what the US has delivered in the last 1 year. Okay, and what I want to share with you this, right, is that there's always this debate against growth and value. Okay, so for me, I do both lah, right? So because I watch both, right, I can tell you that there could be a rotation that's going on. Okay, most people will think that, well, growth stock is the best return. Okay, historically, it is not true. Right, this is also another misconception, because for the last 10 years, growth has done very well. So a lot of people extrapolate and think that growth is the way to go. Okay, for the last 100 years, value deliver a higher return than growth. You didn't hear it wrongly, yeah? For the last 100 years, value stock deliver higher returns than growth for most of the time. There will be periods where growth stocks do better. There will be periods where value stocks will do better. So for the last 10 years, growth has done better. Okay. And in the last 1 year or even 2 years, I can see that there may be some rotation that's going on. Okay. Growth may not do so well in the next, I don't know, 5 to 10 years. Value stocks will likely do better in the next 5 to 10 years. Okay. It is a cycle, right? They just take turn. Growth has its day in the sun. All right. For the last 10 years. Okay. Now is the time for value to shine. I'm not saying that it's confirmed. I do both, right? That's just my observation. But to prepare you better, I think that it is a good time for you to learn some skill set to find undervalued stocks, to find value stocks. Okay, I think it's a skill set that a lot of investors have given up when growth has been doing very well, right? Especially the US stocks. So they forgot about how to do value anymore. Okay, it requires a different kind of mentality. It requires a different kind of hunter characteristics. Okay, to find this kind of undervalued stock, right? And now let's move on to growth stocks. Okay, even though I say that yes, you should pay attention to value stock, but that doesn't mean that you totally don't do any growth stocks. Okay. Also depends on your kind of strategy, right? So for me, I do all three. I do growth, I do value, I do momentum. All across 3 time frame. Okay, so one is the long term, one is medium term, one is short term. Okay, I already mentioned the medium term to you. Okay, buy those kind of stock very cheap and then sell them when the price rebound. All right. Now I want to talk about those stocks. Okay. And why I want to emphasize so much on the value stock just now is because I think now people are like 100% in growth stock and 0% in value stock. Okay. What I'm trying to say and bring the point is that maybe people should shift to something like 50-50. Okay. Especially when value stocks are maybe going to outperform growth stocks for the next many years. Okay, so that's where I think that people must rethink their allocation in their portfolio, right? The kind of stocks that you want should shift according to how the market is transitioning. Okay. Moving on, so what is a good PE, PB for Singapore when we search for value? Okay. Again, very difficult to answer this question. Okay. Why would I say that, right? So I give you a few examples. Okay. You talk about PE ratio, PB ratio, right? Okay. So this is strategy issue and the kind of stock you look at. Okay. If it's a services industry, right? Okay, if it's a service industry, right? Okay, PE is important. PB is not important. Because especially it's an asset-like kind of services, education, F&B, medical service. Your PB ratio is going to be like what? I don't know, 3 times, 4 times. Then you look expensive, right? So you screen for PB less than 1 time. Then this kind of stock will be out, but they could be cheap. Just not on a PB basis. Okay, if you look at an asset-heavy company like property company or like Centurion, this kind of company, okay, PE is okay, but asset-heavy PB will be much more relevant. And in this case, PB less than 1 can work. Okay, and let's say asset-heavy, the PE ratio could be like in a single digit, maybe 5 times PE. Then your service industry, right, can be a 20 times PE. Then how do you cut? Is 15 times PE expensive for asset light? May not be. Okay, so again, now it boils down to the kind of stock you're looking at. There is no one answer for you, right? Oh, I think anything less than 10 times PE is okay. Anything less than 1 times PE is very cheap. Okay, if you use that kind of numbers, right, you will only get one kind of stock. There will be no diversification in your portfolio. The stock you buy are one kind one. Okay, because you use that kind of metrics to screen for them. Okay. Yeah, there are many layers to investing. Okay, I try my best to explain to you. That's why a lot of the questions you ask, they are good questions. It's just that I cannot give you a straight answer. because it's not so simple. It's not a simple straight answer. There are layers beyond it that you need to understand the implication. Okay. Yeah. So let's now look at growth stocks. All right. And I hope you can better appreciate what Warren Buffett says. Okay. Warren Buffett definitely is a very wise person, and he is the best investor in the world. He has a lot of very his quotes are full of wisdom, right? But I think most people don't understand deep enough to really know what he's trying to say. Okay, so for example, this quote: "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Okay, so what is he trying to say? Right. So most people will say that, of course, different people will evaluate it differently. Yeah. Okay. But later, as we go along, we will come back to this quote. Okay, and you also answer what Mervin is asking. Okay, then you will know why the ratio method by itself will not work. Okay, even for screening. So when you talk about growth stocks, right? And one key thing is that it must grow, right? And what do we mean by growth? Is it cash flow growth, earnings growth, revenue growth, asset growth, or whatever growth are we talking about? Okay, specifically, it's gonna be revenue growth. Of course, earnings must grow in tandem, cash flow must grow in tandem, but the key thing is revenue must grow. If your revenue doesn't grow, you are not a growth stock. And growth stock must have the characteristics of not just fast growth, must be consistent growth. It may not need to grow every year, but over a long period of time, there should be an upward trend. Okay, like for example, some year they don't grow, it goes down. It's fine. Okay, but overall, the trajectory, if you zoom out, is an upward trend. Okay, and you don't need to look at very high annual compound growth rate. Like some people say, I want a stock that can grow 50% per year. Many stocks, after they grow 50% a year, they will slow down. Okay? It's just like humans. When we are like a baby, we grow very fast. We have growth spurts. But once you reach a certain age, you stop growing, right? Or your growth will slow down. Same thing as a company. It cannot grow 50% for everyone. It cannot grow 20% for everyone. Usually, the highest sustainable growth rate is in the teens. That means 10 plus percent. That's the highest you can go. Okay. Most stock cannot sustain above 20% growth rate for say 10 years and beyond. Right. Not impossible, but just very, very difficult. Most companies won't cut it. Okay. But understand that growth stock must at least exhibit this. Does Centurion have this kind of profile? No. Right. Let me ask you, does Singtel has this kind of profile? Revenue grow, this kind of trajectory? What do you think? What do you think? Singtel. Singtel revenue grows like that? Unlikely, right? Singtel revenue like go like that. Okay. Right. SPH revenue go like that. Right. So just when we talk about duration affects your strategy, then your strategy will then have a different aspect that you look at. Right? Just now when we look at Centurion, we do a valuation. Do we even care about the growth rate? We don't. Growth rate is not important. Okay? For value stock, growth rate is not important. So the other problem that a lot of investors invest is that they don't know what is important, what is not important. Then they look at unimportant things and make a decision. That's why wrong. Right? If you hold a stock for the next few years, right? Do you need to care about growth rate? Don't need. Right? You only care about how cheap can you buy and how high the price can go so you can sell for a profit. And what will happen to cause the price to go up. Right? These are more important questions. Okay, to find out. Right? But if you want to hold a stock for long term, it better be worth more in the future, right? It better be worth more in 10 years than what you pay for today. Okay. And the only way to be worth more is that it has to grow. Common sense, right? And for a stock to grow for a long time, must it be high quality or low quality? If you want a stock to grow for over a span of 10 years, can a lousy stock grow for 10 years? No? Cannot, right? So same concept, okay? The duration drives the kind of stocks that you're looking at. Okay? And to flip it around, if a stock can really grow so well for a long time to come, you better hang on to it because it gets more valuable every single year. Why sell it? That's why you buy and hold. If a stock cannot or a company cannot become more and more valuable over time, you should not hold the stock. Okay? Common sense, right? I'm not talking about rocket science. It's just that humans, when we go to stock market, we lose all this common sense. Okay, back to the underwear, right? This is your growth stock. And just now, what did we say? You want to hold long term, you better buy quality one. And you better pay more for it. Don't think about buying cheap growth stock. Right? Growth is never cheap. The market is not stupid. They are not the only one that can see growth. Everybody else can see. That's why the share price have gone up. Right? Okay, so this is your growth stock. This is your value stock. Your Uniqlo underwear. You don't care that whether it grow or not, doesn't matter. The quality don't need to be very high. You're just going to use it for a few years. Right? Later we talk about short term, which is momentum stock. Don't even need to look at fundamentals. Don't waste your time. Buy and throw away. Buy and sell, buy and sell, buy and sell, buy and sell. Right? It's more technical in nature. We only care about whether the share price is going to go up in the next few weeks and months. That's all. We don't care whether the share price will come down in the next 10 years. Okay, so again, time frame drives the way that you invest or trade. Okay, hope the underwear example sticks. So a growth stock must be able to withstand the test of time, competition especially. Okay, competition is a very key thing. And that's why when Warren Buffett buy, he never buy into industry where stocks have a lot of competitors. No competitor is the best, right? Then that's a monopoly. But they still must act like they're competitors. Otherwise, there'll be antitrust law. Okay, yeah, must act like very competitive, but actually it's not. Okay, so usually you invest in a market leader that is in a oligopoly market. Only a few players, and you buy the best because you want a quality one that can last a long time, that can grow for a long time to come. So you realize it's very stringent. So you cannot anyhow buy a stock that you want to hold for a long time. Cannot, man. You must be very stringent. Most stocks won't make the cut. And if you are not sure whether you'll be valuable in 10 years' time, right? Better don't buy lah. Okay, because you're not sure. Right? Why bet on things that you're not sure? And that's where Buffett talk about you must be you cannot have many stocks. You must be very stringent. Okay, because he's talking about from a buy and hold perspective. Okay, so you must also understand that his advice, right, Warren Buffett advice, is only suitable for you to buy this kind of underwear. Okay, this is Warren Buffett advice. You don't go and use Warren Buffett advice to go and buy Uniqlo underwear or a disposable underwear. All wrong. Doesn't work. And that is also why I say that you cannot anyhow take other people's advice because you don't know what kind of context it's referring to. It may be different from you. Then you anyhow use it and you abuse it, principal clash, that's where you lose money. Okay? So when you look at this kind of growth stocks, the things you analyze, the things you research into will be different. Okay, what is the market size? What is the growth potential? Can it still grow or not? Who are the competitors? Can it have enough? Can it win over its competitors? Prevent the competitors from stealing its market share. In fact, grow its market share at the expense of other competitors, right? And is it in a sunset industry? Is it in the industry that's still irrelevant in the future? Or is this the industry that's growing into the future for the foreseeable future, right? So you realize the research criteria are all different from what we did, for example, in Centurion. Centurion, we don't care about all these things. Okay, we don't even care about who the competitors are, right? We don't even care whether it's a sunset industry or not. Even sunset industry, you can make money. Okay, right? So when you look at growth stock, all these become important. Okay, give you an example, right? This is Arista Networks, US company. I think most people never see this before, right? These are the things they sell. Okay, and also the networks that they connect all these things together. These are routers and switches. Okay, you don't use it in your home. All these are used in the data centers. Okay, yeah. So these are part of the server rack, and they will connect a lot of computers together, connect between the racks, basically. Okay, and then connect to the internet and then serve you. Right. So they play a very important role. They are like the traffic lights, okay, or the roads to connect all these data center server racks together. Okay. And also AI play, because without all these switches and routers, your AI services cannot be delivered to you. As simple as that. And they are the high-end one. Competitors, not many. Okay, there are three that dominate the whole place, whole field of a high-end, not the common, not the normal one. Right. So Arista is the almost got half, right? So it's a market leader. Okay, ROM is second, and Cisco is probably a company that I'm more familiar with. It's a 21%. Okay, so it's a market leader, right? And let's look at it, whether is it a high quality stock. Okay, give you some reference on Cisco. Okay, maybe some of you may not have some sense of whether these are high quality. Okay, but maybe you can look at profit margin, right? Do you think that this profit margin is high or low at 31% net profit margin? So, for example, for every $100 they earn as revenue, $31 they keep as profit. Is this considered high or low? High, right? Okay, confirm very high lah. Right. A lot of companies will not be able to do this kind of profits. Okay. So all these metrics, right, is a sign that this is a high quality business. Right. Usually they have very high margins, right? Why? In order for you to have high margin, right? What does that mean? You must charge at high price, right? Right or not? Okay. Cannot be you keep your cost very low, right? It's not sustainable. You cannot keep cutting costs. You can only keep increasing price. And when you increase price, people still buy from you. What does that mean? They didn't go to your competitors. Okay, that means you have competitive advantage. Your margin is higher than Cisco. So that means that even if they charge higher price, the customer didn't go to Cisco. They still buy Arista because it's the best in class. It's high quality. Right? If they want the best quality underwear, you pay up for quality. You accept the price. Okay? Right? And then now I ask you, at that time, when I look at it, 2023, right? The PE ratio was 35 times. At 35 times, intuitively, does it feel expensive or cheap? It feels expensive, right? 35 times there. That means you invest in this stock, it will take 35 years to make the profits that's equivalent to the price that you pay for. 35 years, eh? Very long, right? Most people say it's expensive. Okay. But actually, 35 times is what it usually trade at. Because it's high quality. Okay, the fair value was around 139 to 172. Okay, so usually I follow the lower end, so that's safer, more margin of safety. At that time, the price was 141. Right, so I say you can buy. Okay, I bought. Okay, I'm still holding to today, right? Because it's a long-term holding stock, a growth stock. And that was around 2023. Okay, the price a bit different. You can see here, how come $35, right? It's because they went for a stock split. right? Good do stock split. Because the price go up, too expensive, they split. Go up, split. So that it's more affordable for people to buy. Okay. And I'm up about 200% since 2023. Okay, still holding, not selling, right? So especially if more data centers, you're gonna need more of these switches and routers. More AI, more intensive AI stuff, you're gonna need more routers and switches. Okay, and this is going to be a big beneficiary, right? Because they are the top end, the best switches and routers out there in the market. Okay, so that's how the decision is made differently, right? And your Centurion will not be at 35 times. The Centurion PE will be like 3 times. Yeah. So now let's go back to what Warren Buffett is saying. Saying that it's far better to buy a wonderful company at a fair price. So Arista is a wonderful company, not trading at a wonderful price, but it's a fair price. At that time, $141, PE 35 times is a fair price to pay. It is not cheap, but it's a fair price to pay. Centurion is a fair company. It's not fantastic. It's not a growth company. It's not a stock that you hold for long term. Okay. But it's trading at a wonderful price. He says it's far better to buy Arista than Centurion, in other words. Okay, that's because he's a buy and hold investor. But I show you that even Centurion, you can make 100% as well. Okay. But if you hold longer, Arista, you should make even more. Okay, so that's what he means far better, right? Because you don't need to find another stock. You just hang on to it. Okay, over time you get more and more valuable, right? So if we can relate back to my favorite underwear example, this is like your Arista. This is like your Centurion. Centurion is not a $60 underwear. You're not gonna pay. I'm not gonna buy Centurion at this price, $1.70. It's way above book value. It's ridiculous. It's super overvalued. Okay. Arista network now is also overvalued, but if it goes back to say around P 35 times, okay, it can still be a reasonable price to pay for the quality that you're going to get. Yeah. How do I determine fair price? I use composite of price ratios. I usually compare the trading history of the own stock. Okay, I don't compare, right, against the competitors. For example, right, I won't compare the P ratio of Arista Network versus Cisco, because most people will do this, right? Because they call it peer comparison, right? A comps table, because they are direct competitors, right? So they will use this as a reference. This is not a right way. Okay. The reason is that, let me ask you, if Arista is so much better, right? You can see the profit margin is all higher. Okay. Should Arista stock trade higher, same, or lower than Cisco? If based on these numbers, you can see that Arista is a higher quality stock than Cisco. Should Arista stock trade at a higher PE ratio, same PE ratio, or lower PE ratio compared to Cisco? Yes, Arista will always trade at a higher PE ratio than Cisco. And for those who cannot understand, 3 banks here: DBS, OCBC, and UOB. Can you tell me which bank trade at a higher price to book ratio? DBS, right? Why? Winkit knows the number 1.8. Okay, I don't know lah. Since you know, I trust you, okay? UOB is 1.3. OCBC, eh? Okay. So can you say that, oh, UOB is cheaper than DBS? That's why buy, okay, thanks Winkit. Give me all the numbers, okay? Can I say that, oh, OCBC is cheaper, so buy OCBC? Cannot. Why? Because OCBC will always be lower than DBS. If DBS drop to 1.5, OCBC maybe drop to 1. It will always be cheaper one. There is a premium. So peer comparison doesn't work one. It's better that you compare with DBS own history. It's 1.8 times the average that you will pay for in the past 5 years, for example. Okay, compared to its own trading history rather than peer comparison. This is also another thing that a lot of people do wrongly. Okay, they don't understand that market leader has a premium. Right? Just like LV bag has a premium over a no brand name bag. Okay. Where's a good source for historical PB? Some brokers provide it, right? Otherwise, usually you need to pay. Otherwise, Morningstar, I think Morningstar do have some data available. Okay. But again, PB is not for all companies, right? Banks make sense because it's the underlying assets. Okay. You can only use PB when the underlying assets are valuable. If underlying assets is not valuable as an asset-like company, PB is useless. Okay? Can. Now, let's move on to the third one, the disposable underwear. It make it sounds very low class, but uh, it's simple, no, it's fast free, and you don't need to think so much, right? So there's beauty in disposable underwear kind of strategy. Okay, this is meant for short-term trading, and this kind of short-term trading, usually method two is better. Okay, buy high, sell higher, right? Rather than buy low, sell high. Buy low, sell high is better for your medium-term strategy. Okay, buy high, sell higher is better for your short-term strategy. And when I say short-term, right, it means weeks to months. Okay, medium-term means a few years. Long-term means many, many years. Okay, so the time frame drives the strategy. The reason why you don't want to buy low, sell high in the short term is because markets trends. That means they go in one direction for a longer time than you think is possible. Okay. So for example, if a stock go down, you think that it's cheap, you want to buy, and your intention is to quickly sell, right? In the next 1 week, for example. Okay, or the next 1 month. But the thing is that what if it didn't rebound meaningfully enough for you to sell, yet it go down some more? Then you'll be in a very big loss. Okay, and if you don't know how to manage your position, you become a long-term investor, you can lose a lot more than you think you intended to. In fact, you don't even intend to lose. You wanted to sell on a rebound, but just that this rebound didn't happen. Okay, so understand that it's not nice to go in the direction, to go against the direction of the trend if you want to trade short term. Okay, it's just like rowing a boat or sailing. Okay, sailing, sailing. Okay, A, you go this way, wind go this way. Okay, B, you want to go this way and the wind goes this way. So which is easier, A or B? Again, common sense, but lost in the stock market. I also again don't know why, right? Which is easier? Sail in this direction, in A, wind is against, or B, wind is here and you're sailing here. Go in the direction of the wind. Which is easier, A or B? It's not a trick question. How? Which is easier? B, right? Obviously, right? You're going to need less effort. Okay, so remember this. If you want to trade short term, you need to join the trend. You need to join in the same direction, sail in the same direction. One person is not going to change the direction of the wind. One person is not going to change the direction of the stock. If the stock is going down fast, you buy it, you're asking for trouble. You think you one person can reverse the trend. Even Warren Buffett maybe also cannot reverse the trend. You want to reverse the trend. Okay. It's faster to make money if you go with the trend because it will help blow in the direction that you're going. Isn't it easier to make money? So remember, trading is about finding the path of this resistance, not find the path of the hardest resistance. Okay. Find something that's going up, not going down. Right. So this is something that's very different from your value investing, right? The medium term strategy. Medium term is about buying cheap. Okay. But in the short term, you don't care. Remember, in the short term, don't need to do valuation. Okay. Let me ask you, have you seen overvalued stock become more overvalued? Have you seen overvalued stock go up even higher? Have or not? Have or not? Anyone? The three penny stock. But even this Centurion is the same thing, right? From about $1 is expensive, right? Okay, for $1 is expensive. It went up another 69%, eh? Okay, $1.05, right? From $1.05. Where is it? Let's find it. Okay, so it's March this year, right? Just 3 months ago. 3 months ago, it started to become expensive, right? It was at $1.08, 7 March. Then today is $1.69. Right? So what you think is expensive in the short term can run so much. Okay. So this stock has transited, right? It used to be a value stock from say 2020 to 20 start of maybe end of 2024 lah, near the end of 2024. And then it transited to a momentum stock, a short-term stock. So that means that even say, right, I used the value strategy, I bought at 30 plus cents and I sold at 79 cents around here. What I can do, right, is that I can continue to trade the stock short-term using the momentum strategy. Okay, so momentum is flexible. Momentum can be a growth stock, momentum can be a value stock. Whatever stock catches a trend and blow in one direction, that's where you can start to leverage on the trend and ride higher and higher. So even of overvalued stock, it's okay to buy in the short term and make money in the next few weeks or months. Okay, you don't need to care about valuation. Don't need to go and take out Excel spreadsheet. Don't need to look at financial statements. So there are some people who like this method because they don't need to do a lot of things. Okay, to make money, don't need to do a lot of things. Yeah. Give you some example. Okay, this is Eli Lilly. The trade was done in June 2023. Okay. Can you see that the stock has already gone up quite high, right? Probably about 80% from about 1.5 years, right? The stock has gone up about 80%. And it's at the top right-hand corner of the stock chart. Okay. I didn't do any valuation, but anyone who look at the stock chart will say that it looks expensive. Agree or not? Right? But based on the methodology, you're supposed to ride the trend, right? There's enough momentum being measured. And this was where I entered. This was where I exited for 24% in a span of 5 months, 6 months. 6 months. Okay, 6 months, 24%. Okay, right? Yes, I didn't get 100%, I didn't get 200%, but it's a much shorter time frame. Okay, it's a much shorter time frame. Right? And all I did was to go with the trend. Okay. Spotify, right? Again, looks high. The stock, why don't buy here? So silly. This was $70. Wow, now 182, more than double. Why you buy now? Right? Why you buy here? So expensive. 182 you still buy, 70 don't want to buy. Okay. It could not you could have missed it, right? Or you could have think that this is not a very good long-term growth stock and confirm this is not a value stock, right? So the strategy doesn't tell you to enter at that point. Okay, so and this is mode. This is called hindsight bias. And when invest, please don't do hindsight bias. When you look back 2020, confirm correct one. Okay, but the stock doesn't care. You only make money on the right-hand side when the time move forward, not move backwards. So at 182, what are you going to do? Okay, it's maybe not a value stock, definitely not a value stock, right? Could it be a growth stock? Potentially. Okay, then you use that method to analyze, right? But for me, I use the momentum and I pick it up, say, okay, can buy, even as 182, right? So this was sold somewhere last year for 81% return. Okay, and this was high when we look at the previous screen. Okay, it was around here. Right, then it just continue to trend up. And so at about 300 plus, no, 200 plus. Okay, I think actually it went up even further, right? But it's okay. This was about 9 months for 81%. Okay. This is Ubiquity. This was sold this year, at the start of this year, entered middle of last year, right? So this is also less than a year trade, right? So you realize a lot of all these shorter term trades is not even held more than a year. Okay. There is, of course, a exit signal, right? So, but this one got double, 118%. Okay. And when you want to do short term, as with value stock or even growth stock, you must have an exit strategy, right? Like Centurion, I know where to exit and know where to sell. Same thing for all these short term trades, you must know where to sell. Okay. The other problem is that some people they chase this kind of stock, right? Wow, any stock they run a high already buy, right? Okay. They make money for a while, but they don't know how to sell. They hang on to it and then the stock collapse. That's where they lose a lot of money. Okay, so if you want to do all these things, remember any investment strategy, you must take care of the entry and the exit. Most people only take care of the entry. Most people only ask me what stock to buy. Right? Few people ask me what stock to sell. Okay. This shows that most people don't pay enough attention to the selling part. Okay. So for any strategy that is complete, must have buy and sell considerations. Right? So for example, for short-term strategy, one way to exit is to use the moving average. Right? So this kind of curve that you see is a moving average. It's just different length. This is a 100-day and this is a 200-day. Okay, it doesn't matter which line you use, right? So for this strategy, I use the blue one, which 100-day. So once the price go below, then that's where I sell. Okay. Can show trades which were mistakes. Confirm have mistakes now. How can all make money one? Right? I give you some example. Let's say don't even need to show you. I give you some example. Okay, so let's say the trend is up, right? And then I buy here. Possible or not? Possible. And it happens. Okay, then the price go down, I sell. So I make a loss. As simple as that. Okay, because you cannot know exactly whether you continue or go down, right? But the fact is that you must have an exit strategy. If you don't sell, can you see what happened? Worse, right? Would you rather take, say, a 10% loss versus a 50% loss? Okay. So the point here is not about, wow, it's always perfect. You cannot make losses one. Not true. You will make losses one, I guarantee you. Right? And make plenty of losses. Okay. But the thing is that you need to sell even you are at a loss. Right. A lot of people cannot sell at a loss. And that's why the loss become bigger. Okay. That's why I say you must have an exit plan. Take the loss when they're small. Okay. Same thing for growth stocks and value stocks. Can there be losses? Confirm will have losses one. Warren Buffett got losses not? Also got losses what? Right? But it's the overall portfolio. But your gainers are much bigger than your losers. That's how you make money overall. Okay. Anyone can tell you that 100% hit rate, not possible. Right? The thing is that you can even make money if you get half of it wrong. If half of your stocks are losers, right? The other half are winners, right? You still can make money. Okay. Provided that your winners are bigger. Right. For example, you make 100, 200% return on a stock. Can you lose five? Let's say you gain one stock, 100%. Okay. Can you tolerate five stock each losing at 10% each? Cannot. Yeah. Then you super inaccurate. You only write one time, you lose five times. Can still make money. Can, right? So for all these 100%, I can tolerate a lot of losses. For this 81%, I can tolerate a lot of losses. Okay. For this 24%, okay, I cannot tolerate a lot, right? But I still can tolerate some losses. Agree? Okay. It's not how many times you win, it's how much you win. Right? So that's the concept. Okay. So you need to limit your losses, but you must let your profits run. You must let your winners run. The problem is most people make 10%, they sell already. Then the loss keep growing bigger, they hold. Correct or not? Then how many winners they need to cover the one loss? The math doesn't make sense. So the math should be like that. It's okay that you lose, especially in trading. It's okay that you lose more times, but make sure that your losses are small. And when you win, make sure you win a bit. Okay? It's not about accuracy, but too many people focus on accuracy. Okay? These are some example, right? There are even crash management protection, okay, for this kind of short-term trading. Okay, because for short-term trading, you must be careful. If the market crash very fast, you must get out, especially you are doing this kind of momentum trades. Okay, because momentum crashes can be very painful, right? So for example, during the March, April period was the tariffs, right? But actually the market started to weaken in February. Okay, so this was what I shared. I said that hey, it's not right already. The price is going below the moving average. It's bearish, right? It's bearish. So we should stop buying particular small cap, and we might end up with nothing to buy actually. Okay, we will hold partly cash in this period. And then when the bigger index drop early March, that's where I say we should stop altogether, and we can even consider selling all. Okay, this was before the tariff or everything kicked in, right? The impact, okay, the market crash. So we avoided majority of this crash. Okay, then the thing is that how do you re-enter, right? Because the market again will go up most of the time. You cannot miss the bull run. Okay, now people will say, "Oh, the best day is here," blah 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 blah. This is where we re-enter. Okay, May, about close to 1.5 months ago, right? That's where we started buying again. And this was last week. Okay, that's where it became a lot more bullish. Then we fully deployed capital. Okay, so this is a screenshot as of yesterday, right? So you can see, yes, there are some losers, right? But it doesn't matter if you compare to the winners and the percentage gain. It's more than enough to cover. Okay, it's not about getting perfect score, right? Okay, it's not even about having more winners. It's about the winners must be bigger to cover the losses. That's how the math works. Okay. Is Novo Nordisk cheap now considering the challenges it faced against Eli Lilly? From a growth perspective, yes. I won't say it's cheap, it's reasonable. Actually, I just looked at it this morning, right? So that's why I can tell you. Okay. It's it's a fair price. Right? It's not a wonderful price, but it's a fair price. Okay. And so these are the three approaches that we have discussed today. And remember, I told you about the duration. So the kind of duration you wish to hold a stock determines the kind of stock you buy, determines the kind of strategy you use. Okay. So this is, if you recall, if I map it, this is your disposable underwear. You buy, use already, make money, time to sell, get rid of it. Don't think so much. And you don't need to research on the disposable underwear that much. Correct or not? Because you're just going to use it for a short time. Medium term is your value stock. This is where you buy low, sell high. This is a Centurion example that we used just now. This is more like your Uniqlo underwear. Okay, where it's cost less than $10, you can wear maybe 1-2 years, right? And yeah, you still need to do a bit of research to make sure that the quality is worth it, even though you know it's cheap enough. Then for long term, that's your growth stocks. You want to hold it for long. And this one, you better buy higher quality. Remember, we say that only high quality can become more valuable over time. The low quality ones will not last. Right? You try to use the disposable underwear for 5 years. Right? Maybe after 1 week, cannot take it already. Okay? Cannot make it. It will tear. So you need to go for quality. And when it's quality, you need to pay up for it. It will be more expensive. Right? So this is something like the icebreaker, right? Brand that we saw just now. Okay, that one piece costs what, $60? That you can use longer. Okay. So that is the idea, right? When you go shopping, use that logic when you go to the stock market. A lot of the logic in real life work in the stock market. It's just that we always do the opposite things that we do usually. Common sense is not common in the stock market because of all our inherent biases. It's not your fault. It's how our DNA is wired. Okay, we are trained to run away. Our ancestors is trained to run away from predators, right? Run away from tigers. Our ancestor is not trained to invest in the stock market. That's why we behave very differently, right? And that's why you need an investment strategy to guide you what to do. Then you know what is the right thing to do instead of listening to your gut feel, listening to all the media nonsense, and that's where all the investment go haywire. All right. So hopefully you understand where I'm coming from. And if you want to really embark on this journey, if you really want to invest in individual stocks, you probably need a better toolkit to do it properly. And I try as much as I can to share with you what I know and what I observe in a lot of people, and what they are doing wrong, right? And some of these mistakes is my own, right? I learn the hard way. I pay for the mistakes. That's where I hope that by sharing with you, you will avoid paying those mistakes with your own money. Okay. So if you are interested to take this to the deeper level, right, we have this lifelong investing program for you to consider. It's called the Intelligent Investor Immersive Course, or I3 in short. So it begins with a 6 session because need to equip you with the strategy, understanding, right? So you'll learn all three strategies, okay? But in this 6 session, you learn two. Later, I'll explain to you where you learn that third one. So the first 2 sessions, we'll go through the value strategy in detail. I'll teach you all the steps that's required. Today, we fast forward very quickly because we don't have enough time, right? Probably you'll find that there's a bit of misjoined parts you don't understand. It's because there are a lot of details in between those steps that you need to consider. Session 3 and 4, that's where growth investing is all about, okay? And that's the other kind of buy and hold stocks that you look for, right? So this is your icebreaker underwear. This is your unicorn underwear. Okay, how do you buy those kind of stocks? And we also have other things, of course, to make your education holistic and complete. Okay, there are trading mechanics. That means that because we invest not just in Singapore, we invest in US, we invest in Hong Kong, we invest even in China. Different markets have different characteristics. Okay, you'll find that for value stocks, it's very common in Singapore and Hong Kong, but growth stocks are more common in the US and China market. Okay, so different market requires different kind of rules, right? Trading rules are different. Dividend taxations are different. So your consideration, what kind of stocks you buy will also be different. Okay, yeah, there's actually a lot of nuances, right? So we'll go through, don't worry. And finally, the last session is where we combine everything that you have learned and apply to the real stock market. What are the stocks we can buy right now? Okay, simple. So this is a practical course. At the end of the 6 session, you should come up with ideas that you can take action on based on the strategies you learn. Okay, so it is that practical. It is not a theoretical course. Okay, where you learn about all this market theory. Those are what you learn to take exam. This is not exam. This is where you want to make real money. Okay. So this is like a roadmap that we will do. We will break down the stocks into different kind of stages and what kind of characteristics there are. Then you know whether this is a growth stock, a value stock, or a momentum stock. Okay. There'll be a step-by-step guide. All our courses are structured in a way that you can follow easily, even if you have no background. in investing. All right. So this is the program. It comes with the 6 session course. Okay. And we have more things to help you succeed. And the second thing is that after the course, you are unlikely to be an expert investor after 6 sessions. It's not possible. Okay. Yeah, even after 10 over years investing in market, I'm still learning. Okay. And I learn new things, I can tell you. All right. So it's a never-ending journey. And that's where we have this continuous mentoring session for life. Right. Give you an example what we cover. Okay, because this is 2024. I don't cover 2025 because the year haven't ended yet. So this was what happened in 2024. At the start of the year, I did talk about gold. Right, this year gold has been very good. Okay, in fact, since last year, right? So, but Jan 2024, it wasn't the case. Okay, in the mentoring session, usually I give outlook and I give like ideas. I say that gold is very unusual. It's a bit technical because gold has no fundamentals, not much. And its testing is $2,000. Okay, many times. Right. So for technical analysis is that the more frequent it tests, it's more likely that it's break. And then there's this triangle. Right. There's some technical analysis, ascending triangle. And it's squeezing the price into a zone. And of course, it can break here, but it can also break here. Right? Either way, a big move will come after they break through the triangle. Right? So it actually broke on the upside, and now we are looking at what 2000 at one point 2008. Okay, now probably come down a bit. All right, but the trend is still up. Okay, so we go through sessions like this where I'll share with you ideas because I know that you're very busy. You may not have time, even though you learn the strategies. That's where once every 2 months we'll come live and explain to you, right, what I see in the market. And the next one we are coming up is actually next week. Is it next week or next 2 weeks? I can't remember. Okay, then I promise them we're going to use how to use AI to do calculation. Wow. Okay. Don't need to calculate stock. Like just now I showed you Excel spreadsheet. Right? Actually, the AI can do the job already. You just need to prompt it correctly. So I'm going to teach them how to do it. So even if you missed it, there's recorded video that you can watch, and that's where you will not miss any session. Okay. Of course, come live will be best because you can ask questions. All right, then that's where I can answer directly. Okay, so this is also additional lessons that you can learn after the course, right? Not just the 6 days. And this mentoring session is for life. Okay, investing is a lifelong endeavor. Okay, and we talk about calculation, right? And I can tell you, after you learn how to calculate, you never want to calculate because calculation is tedious. Calculation doesn't make you money. Calculation also only help you to decide whether you should buy the stock or not, right? Or sell the stock. Okay, but it doesn't make money direct. And it costs man hours, right? And I know that some of you, your man hour very expensive one. Okay, so even if you take medium pay, calculation alone 1 year can cost you over $6,000. Okay, the time spent, right? It's not worth it. Okay, the ROI is not high. So what we do is that we provide you with stock data as well, right? So as I mentioned, we cover many markets: Singapore, US, Hong Kong, Asia, China, right? And I mentioned just now, I show you the numbers. It's more than 10,000 stocks easily. Okay, so this will be a Excel spreadsheet where you can download on a monthly basis, and you don't need to pay, right? Because a lot of all this data you need to pay, okay, by right, if you go off the shelf solution. So I compile and download for you, and you can just filter it, find the data that you need conveniently. Okay, so that's the stock data. So that you don't need to calculate. And I also will teach you how to use AI to calculate, okay, if you want a more precise number. And there's also watch list that I'll share with you, right? So just now, I think Wenki asked, right? Is Novo Nordisk a good price to buy? Right? You think I every day so free go and calculate the stock value, and the price move every day, right? So it's not possible. Okay, so what I do is that I have this my secret stash of database of stocks. Okay, I have a growth stock, I have a value dividend stock watch list because they're using different methods to do valuation. And then the price, right, will update daily one, automatic one. See, I got system. And I done the fair price valuation. Okay, don't follow this. This one is like, I don't know how long ago, a few years already. Okay, just use the screenshot to explain to you. And then based on the price versus the fair price, I will know whether is it undervalued, fairly valued, or overvalued. Okay, so that's how I can keep abreast with the changes in the market versus the valuation very quickly. Okay, and this watch list will be shared with you. You will get access to this database. Okay, that will make your life easy. You don't even need to calculate. And all the calculations are actually shown on the right side. You can find the raw data and you're trained how to calculate. So you'll be able to read the data and understand them. So there's a watch list and stock valuation. It's also for life, right? So don't intend to charge subscription, but we are thinking whether to change, okay, to more of a subscription base. So for you to consider, lifetime, of course, better. Don't need to think so much. Okay. And the other thing is, I didn't mention much in the previous 1 hour is because don't have enough time, right? We did briefly touch like the industry, is it oligopoly? Is it a market leader? Who are the competitors? What's the market size like? All this kind of thing is what we call qualitative analysis. Okay, not using financial statements, but to talk about the business aspect. And this is usually the hardest, based on my observation of a lot of investors. Not easy, because if you have not been analyzing business for a long time, you might not know what to look at. So this business, what is important, what is not important, what should you zoom in, what should you ignore? Okay, so this is where the write-ups will help, right? So we have write-ups done over the years for the stocks that we focus on, right? So then you know what do we mean by quality stocks and what do you mean by it's a value stock, okay? Uniqlo underwear versus icebreaker underwear, different. Right, so you can see value stock, growth stocks. There's also another class of stocks here. I'll explain the cost, okay? So all this archive will be accessible, right? All the previous stock write-up and the future ones will be accessible to you, right? We just did one today, okay, on the value stock in Hong Kong. So actionable ideas, there are many stocks we cover, right? It depends on what you like, what kind of strategy you use, okay? So some we even didn't buy, but some graduates, they did buy themselves, right? So one day can up 25% sometimes, okay? This is a value stock in Hong Kong. Douyu is a China stock listed in US, okay? It gives out dividend more than the share price, okay, because it was very cash rich, right? So it was also a value stock. Okay. So there's a stock analysis archive. You get a past and a future stock write-up and make your life easier. Don't need to analyze from scratch. Okay. Time to time, I also give trade ideas. Actually, today I also give another one. Give two, right? You can give two. Okay. So just to show you, Aristar Network, right? I mentioned just now, it was introduced in May 2023. Okay. Say that it's a hidden gem in the cloud business. That time, yeah, wasn't that hot, but already important in servers. Okay, for Aristar Network. And I also talk about CrowdStrike. Okay, before it became infamous due to the global blackout. But that blackout shows you that how important CrowdStrike was to all the businesses around the world. Okay, with CrowdStrike got problem, yeah, everything down. Okay, so you can see how important it has become. Right. So that was a while back. You can see the price that was bought was very profitable. I think both of these are up about 200% already. Okay, since 2 years ago. MSCI, another stock, 465. Even now it's 570. Okay, not very big gain, but still at least make some good gains. Market shifts, this was prior to the tariffs that sank the market. Okay, so I said be a bit careful. Value rotation might have been going on, right? Since about 5 months ago, I talked about that. And indeed, value stock did very well so far. And these are some value rotation play. We started to focus more on value stocks, as I mentioned just now, right? Hong Kong has plenty, yeah, especially after they got whacked for the past 3 years. They came back very strong. And this stock was covered 2 days before it went up 10%. Okay, so 18% in a week. King Food was mentioned quite a way back, but one day can go up 7%. Hong Kong Land, I mentioned just now, right? 10%. This is our example stock that we practice in our course right now. Okay, so there's some catalysts going on as well. All right, so all these things are happening. And as I said, I think value stock is back, but a lot of people has forgotten how to look at value stock already because they focus on growth stock for most of the time. So you get trade ideas and alerts. And you also get to see the portfolio holdings, right? So what is in the portfolio, what are the long-term stocks, what are the medium-term stocks, what are the short-term stocks, okay? All these are also lifetime access, all right? Altogether, there's also an insider vault, and that's where you can access everything, right? The stock valuation, the watch list, the portfolio, the stock write-ups, the stock data, the mentoring videos, everything in one place, so that you can access them anytime you want, and it's mobile friendly. Anywhere you access it is possible. Okay, so that's the whole thing. As you can see, it's not just about the cost, but a continuous real active investing that we are doing over here, okay, to support you. And we also have money back guarantee. Okay, how it works is that you can enroll the program, right? Because I don't know whether this is suitable for you. I don't know you. Okay, you can enroll the program and you can survey, right? And what we do is that for the first two sessions, you can come and you learn actually the first strategy already. Okay, and you will have a good idea whether you understand what I'm talking about, whether is it something that you will apply right in the market, and if you find that no, it's not suitable or really is you don't know what you catch no more, okay, you can choose to ask for money back, right? And that means that the risk is on our side, not your side, right? Because you get to attend, okay, and still have that money back guarantee on your pocket, in your pocket. To help you decide better, to incentivize you to sign up within the next 3 days, and I'm going to give you three more additional bonuses. All right, only if you sign up within the next 3 days. So the first one is Growth Dragon investing course. For the longest time, China investing is very hated. Right, actually, even now, it's very divided. There are some people supportive. There are some people just hate it. They think China cannot make it. But for those who are open to it, and especially you can see Hong Kong, China stocks have done very well. There's actually a lot more upside, and that's where this will come in handy. We don't run this course anymore, right? So this is something that's exclusive. Only if you sign up within the next 3 days. It's a good primer to help you understand why China investing is different and where the pockets of opportunity can be and where the trends are. Okay, the bigger picture of it. Second is a personal finance masterclass. This is also a recorded course. This goes beyond investing. And this goes to even talk about other aspects of your personal finance, right? Insurance, your CPF, SRS, even your estate planning. So it's a full suite of it. This is done by one of the co-founders of Dr. Wealth, right? He's a professional in the industry for the last 10 years, doing very well, and he gives you the ins and out of the industry. Okay, it's not to replace your advisor, but to know whether your advisor is telling you the right things or not. Okay. Last and the third bonus, limited time bonus, if you sign up within the next 3 days, is this momentum course. Okay. So it is not taught in the live webinar, but it's recorded in a course program, and you can watch it anytime you want. Okay. And I would say that out of the three, at least complete this first. Okay, because this is more practical. This is the short-term strategy that you can use, right? That you can apply. And we can even add you to the group faster if you want to trade this even before the call start. Okay, later I'll explain to you. All right. So this is the I3 program. It's a lot of things. Let me just explain and run through what you're gonna get. Okay. To help you recall. First is the 6 session course. Okay, it's a live course which is going to happen next month, right? Rather fast. And the first 5 days are webinars, right? The last final day is a face-to-face session. Okay, physical will be in a class. Okay. And then the second bonus is your mentoring session, right? You'll get it once every 2 months for life. Okay, no recurring fee. Bonus three is you get the money stock data, right? A lot of stock data. You also don't need to pay for it. Usually you need to pay few $100 US dollars a year. Okay, not cheap. But download in the Excel file, you can access it. Right? So there's also no time limit of access. And bonus four, you get to watch this and the stock valuation. Okay, updates every day. Okay, and I can add new stocks to it. In fact, I always add new stocks. Right? So the list can be few hundred Actually, it's few hundred for growth, few hundred for value. But you can always sort it and filter to make the list shorter. But this is where you can see whether the stock is undervalued or overvalued very quickly. Fifth is the stock analysis archive. Instead of analyzing on your own, you can read the analysis. Okay, usually our analysis is not lengthy one. We don't go and talk about grandfather story, right? Some they write very detailed, but sometimes just squeezing words here and there. Get the main point right is good enough really. Okay. So our stock analysis is usually easy read and you get a main point and you know what to do. Bonus 6 is trade ideas and alerts. This is where sometimes I spot something interesting, I will share with you, right? So that you decide yourself whether it's your cup of tea. Okay. 7, access to the portfolio holdings so that you can see what are the ones that we deem as better ones that we would add to the portfolio. 8 is the vault where it contains a lot of all this in one place, all the resource page, right? So that's where you can get all the information and consume them conveniently, mobile friendly. Okay, all these are lifetime as you can see. Okay, so that is the value that we want to bring to you because investing is a lifelong endeavor. And if you sign up within the next 3 days, you will get 3 more bonuses. Right, so this is only for the sign up for the next 3 days. And you get a China primer, you get a personal finance class, and you get a momentum. Okay, that is the third strategy that you will learn. So all these are recorded, which means that you can consume them before the course starts. Okay, it's not the prerequisite. The moment you sign up, it will give you the access. Okay, it's not a prerequisite, but it's better that you complete them before. I would say the most important is the priority you should complete is this one. Okay, because this is a strategy that you can do almost before the course starts. Okay, once you learn the strategy, okay, then you come and learn about the growth and value. All right. So now let's talk about the investment in this program. Usually, in a lot of the programs out there, probably one strategy they will charge you for $2,000-$3,000. Okay, they're giving you 3 strategy, which means they will typically charge you $9,000, right? But now I'm not gonna charge you the kind of price, right? And I'm gonna offer you at 3,888, very auspicious number. Okay, and there's only one-time payment. You don't need to have any recurring fee, and it's for lifetime. Okay, and then there's also a money back guarantee. If you feel that it's not your cup of tea, if you feel that you don't understand, you can still ask for money back. And our risk is on our side because you get access to the recorded videos and you get to attend for the first 2 sessions. Okay. There's also, if you want to break this down into 12-month installment, there's an interest-free plan. You can inquire about that as well, right? So that's also an option for you. And then we also don't upsell, cross-sell, right? Because we also know that there will be some providers that they will sell you cheaply first, then they upsell you many, many times. Okay, we are very transparent. Everything is upfront. It's a one-time investment, and you get lifetime value. Something additional is that if you have gone for any of this program before, right, we will less off the amount you pay for. Okay, so that you get to enjoy the same benefits as someone joining you. Okay. So that is what I can offer you, right? The fast, free, to the point. I would say, of course, not simplistic, because there are some things that just cannot further simplify, right? There are some things that you really need to know, not the surface level thing. And I tell you, all these are materials are created because of the battle scars that I've experienced before. So I can tell you. Okay. Yeah. All right. So if you're interested, there's a link in the comment box. You can leave your contact and we will get back to you. Okay. Actually, there's one final thing, right? We are in the process of splitting because we also have another trading course. Okay. And we are still making this momentum strategy available in this program, right? But in the future, this strategy will only be available in the other program. Okay, not this anymore. But right now we still have it. So I would say that you still get the three strategies, okay, if you sign up this time round. Right. I cannot guarantee the next time whether we will still be there or not. Okay. We are in the process of transiting, right? So we are settling the tax side. Okay. All right. How does the money back guarantee work? You have to enroll first, and you can attend the first two sessions. But by the first two sessions, you must tell us, okay, whether you want to continue or not. Right? If you don't want to continue, then we return you what you pay for. Okay. But of course, we have to take back all your assets lah to the recorded cost. Timing of the course. Okay. For if it's a weekday, it's 7 to 10 p.m. If it's a weekend, it's 9 to 1 p.m. 4 hours. Right. So 4 hours in the weekend, 3 hours in the weekday. And the last session is 9 to 5:30. Okay, it's a full day. Right. Yeah. A lot to go through one. Right. We don't have enough time for breaks. We'll have break lah, but won't be long lah. Okay. Yeah. We don't do a lot of all those nonsense stuff. Where is the class? Depends. Usually will have parking will be near MRT station. Don't worry. Okay, will be try to be more centralized as well. How big is the class? We don't do big classes. Okay, usually the classes are less than 10. Okay, so that everybody get enough time to ask question, get enough attention. Okay, yeah. So we have also want a bit more exclusivity. Okay, I think I answered all your questions. Can you skill future credit? Cannot. Sorry. How does mentoring session work? Is it unlimited? Yes. Once every 2 months, there will be one, right? More like a market update so that you know what's going on in the market, as well as the ideas, trade ideas. Okay. All right, so I think we should end here. The link is in the comment box. You can sign up there and not sign up there. You can leave your contact. You cannot sign up already. We will get back to you. Yeah, our staff will get back. Yeah, and the moment you sign up, we will give you access. Okay. As I said, the try to do this first. If you want it fast, do this first. Okay, we can grant you access faster if you want it urgent, right? You want to start watching, can. Okay, we have some cases like this in the past. Yeah. All right. How is your student performance? This one hard to say lah. Depends on whether they practice, whether they follow. You know there's this saying, right? A doctor doesn't guarantee your health. A trainer doesn't guarantee your muscles, right? A dietitian doesn't guarantee whether you eat well, right? So it's really dependent on the person, okay? Right. The dates don't work for me, will be overseas, will consider for your next run. Can, right? Just that remember the momentum may be taken out, okay? If you join the next round. I cannot guarantee you'll be there. Okay, but still you get two strategy at least. All right. Okay, thank you very much. And hopefully it's been useful for you. I try to squeeze as much content as possible in that few hours. All right. And yeah, if you have more questions, you can ask our staff. Okay, they'll get back to you. Thank you very much. All the best in your investment and goodbye.